Welcome. Today we're digging into some analysis from Alasdair Macleod, focusing on, well, what he sees as major triggers for a massive financial repricing.
Right, and specifically why he's calling silver, of all things, a potential lifeboat.
Exactly. A lifeboat for what he describes as a sinking monetary system. Okay, so let's unpack this. Where does he start? Silver's price.
He does. He points out that even with silver moving up towards, what, $44 an ounce recently, it's still largely treated just as an industrial metal.
Just industrial, not monetary.
Pretty much, and that's key to why he thinks it could really explode upwards, violently outperform, actually.
Okay, and what's driving that potential? You mentioned gold earlier.
Yeah, there's a psychological angle. McLeod suggests traders, momentum traders, might feel they missed the big run in gold, maybe towards that $3,700 level he hinted at.
So they see silver as the cheaper way to jump in, the catch-up trade.
Exactly. It looks cheap relative to gold. But there's a big but here. It all hangs on supply, or rather, the lack of it.
The liquidity problem.
That's it. He says the free liquidity, the silver available for investment, is razor thin. Sure, the vaults at COMEX and in London look full on paper.
But most of that is already spoken for. Industrial use, or maybe people just hoarding it.
Precisely. It's locked up. So even a relatively small amount of new investments, say into ETFs, could trigger, a huge squeeze.
Right. And this ties into the gold-silver ratio, doesn't it? That number everyone watches.
It does. It's been hovering around, 86, 87 to 1. McLeod thinks that could collapse. He says easily fall down through 50.
Through 50. Wow. That implies a massive outperformance for silver compared to gold.
Yeah.
I mean, if gold just stays put, silver would have to go much higher.
Much higher than people think, yeah. And the silver story, it connects to his much bigger concern.
The macro picture.
The dollar.
Exactly, the whole fiat currency system. McLeod argues its value is purely based on faith, on users just accepting it.
And he thinks that faith is breaking down.
Eroding violently is how he puts it.
Yeah.
And the scale here is just staggering when you look at the U.S. dollar. You mean the amount of dollars outside the U.S.?
Yeah. The dollar overhang. Estimates are around, $130 trillion sloshing around globally. That's over 4 times the entire U.S. economy.
4 times. And foreign holders have huge investments in the U.S., like in stocks. You mentioned $15.56 trillion.
That's right, in U.S. equities alone. And McLeod sees signs they're starting to sell, to liquidate.
Which leads him to call this the largest bubble in history ever recorded. Even bigger than the lead up to 1929.
Potentially more violent, he argues, because it's not just stocks or debt like back then. It's the sheer scale now, the global interconnectedness, all the derivatives.
So faith in the dollar cracks. The whole derivative structure could amplify the collapse.
Exponentially, yeah. And complicating all this is what he calls the classic debt trap the U.S. government is in.
Okay, explain that. Tax revenues are falling because the economy is slowing down.
Right. But the interest payments on that huge national debt, around $37 trillion now, they just keep going up relentlessly.
So less money coming in, more going out just to service the debt. That puts huge pressure on the Fed, doesn't it?
Immense political pressure. Cut rates. Make the debt cheaper to handle. But cutting rates weakens the dollar's purchasing power even more.
Which just encourages foreigners to sell faster. It's a bind.
An impossible bind, in McLeod's view. They can't support the debt and the dollar at the same time, not with sound policy anyway.
So is there a specific signal he's watching? A tipping point?
He names one, the 30-year Treasury yield. He's watching for it to break decisively above 5%, specifically mentioning 5.1%.
5.1% on the 30-year? Why that level?
He sees it as a key technical and psychological break. Hitting that would basically confirm the bond bear market is back with a vengeance. It signals the market is saying, nope, these yields aren't enough given the debt and inflation.
And that break triggers the Great Rotation.
That's the term he uses. Massive foreign selling of U.S. assets. Capital flooding out of things like, overvalued U.S. tech stocks.
Again,
into hard assets, gold, silver, and the companies that mine them. He thinks this shift is already happening, actually. Look at central banks.
They're buying gold, yeah.
But McLeod says it's more than just diversification. They are, in his words, getting the hell out of dollars and euros. They want real legal money without counterparty risk.
Meaning physical metal, something that isn't someone else's promise or liability.
Exactly. And this rotation isn't just about the West. It could fuel development in the global South, the BRICS nations, the STO countries. They need commodities for their own industrial growth.
Okay, so McLeod paints a picture of a system under extreme stress, possibly nearing a break point marked by that 5.1% yield.
A very dramatic picture, yes.
So wrapping this up, what's the core takeaway for you listening? Macleod's message seems pretty stark.
It is. He's essentially saying the dollar's purchasing power is on a steep decline, and assets like silver are positioned for a revaluation that, well, most people probably aren't prepared for, going from $44 to levels few imagine.
And he adds that perspective matters, right? Like measuring stock markets in gold instead of dollars.
Yeah, he points out that if you measure something like the Dow Jones in gold terms, it looks like it's already tanking despite the dollar-based headlines.
So a final thought to leave you with, based on all this. If Macleod is right about an unstoppable dollar decline and a huge credit bust looming,
then is the big shift just about moving assets around, from fiat to gold and silver? Or are we looking at something deeper, a fundamental questioning of what money actually is in the 21st century?